get this party started. Oh, 1 second. Let's try this again. Oops, camera's all goofy. Can you guys hear me out there in YouTube streaming land? Hi all. Hi Ace. Alright, I'm gonna kill this for now. Hey everybody, hey everybody. Alright, we got a lot to unpack today. We got a lot to talk about here. But before we get started, a couple of things. I am not an alert service, so don't look for me to give you on-time alerts for actionable trade signals or anything like that. I'm here to contribute to the community, to add my thoughts, and if you find those thoughts useful, great. If not, throw them away. You need to make the trades your own. Everything we talk about is just inputs for you, please. And if you do not understand the trade, why you're doing it, why you're buying it, you shouldn't be in it. Right? You need to make trading yourself. You cannot listen blindly to anybody else. I don't care who they are. You have to understand what they're telling you, what the reasons are, and why they're doing what they're doing, and see if it fits into your model, your framework. So, that said, nothing that you hear here is financial advice. I am not a licensed financial advisor. And if you end up listening to me, you're going to lose all your money and end up living in a happy little van down by the river. Now, I'm in a great mood. All this panic and stuff in the markets. I'm actually in a really good mood. This is hey, look, Bitcoin popped back up a little bit here before we started talking, which is great. You know why I'm in a good mood, guys? I'm gonna tell you something else. I'm just gonna be honest. I got caught up in the hopium right around here, right through here. This breakout, I got caught up in the hype. Oh my goodness, 500,000 plus, blah 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 blah. It was gonna break out, and I let my guard down as a market mercenary. I let my guard down. I quit just ruthlessly pulling money out of the market and started thinking, oh, we're going to ride this gravy train all the way to the end. And I saw this. I drew this line in here. You see this. I had every intention to get out on a bounce back up into these levels and exit my leverage position and then watch all this other madness play out. But I didn't. Why? I got caught up in the hopium. I'm going over my mistakes here with you guys to start. We all have to admit that we all make mistakes. And you have to know when you're wrong. You have to know when you've made a mistake and you know when you're wrong, and then take action. And in trading, it's so important to know when you're wrong and get out. And this was the time right here. Clear as day, perfect exit right there. The market gave it to us all day long. We should have taken it. And then I could have saved myself a little bit of pain. Fortunately, we bought the dip back here, and then I ended up selling. This time, I was a market mercenary. I saw this breakdown happening, and I got out here and here, right? And I made a little profit. Made a little profit, and a bunch of my alts, nicely in profit, exited everything. All my leverage trades. So all my leverage trades. Now, something else I do want to discuss. We're going to talk a little bit about. We have a couple of people in our CTM community that are in a bind right now. They're in a predicament. They're leveraged. They're still holding onto their lightly leveraged position. They didn't get the chance to see this happening and deleverage ahead of time. They're stuck down here. What do you do now? What do you do now if you're lightly leveraged? What do you do now if you're just holding Bitcoin? Do you sell? Is this the end? Is this the end of the bull market? Are we over? And is the bull market ending? Let's analyze all of those things together. I'm going to stop and look at comments. It's so not clear. Yeah, it's not clear at this very moment in time as to what's exactly going to happen next. But what's clear is what's happening. Okay, so let me also explain this. I'm not going to be using the halving track or anything. I don't care about any of that anymore. All I care about is my independent analysis, and I'll take feedback from wherever I can get. I'm going to play what I see in front of my face on the charts, and that is it. That is all from here on out. Period. I don't care if this breaks down and I see it rolling over. I'm getting out. Simple as that. I don't see it. It doesn't look like it's rolling over to me. This looks like we're just going to start with that. I'm not convinced it's rolling over just yet. What are the If you're leveraged though, where should you be leveraged at? Well, let's just march down all of our key levels real fast. You see I've got a bunch of levels up here on the chart. This is the level. I'm gonna delete these, we don't need these anymore. We got a bunch of small resistances coming up here. The 120-day SMA is super important. And then the monthly March close is super important, which is also going to coincide with retaking the 50-day, right? You cannot add to your leverage position until you get clearly above this little downtrend right here. You get to break this, this, and this. And look how nice confluence those things are together. When we break all of that together, we can regain our bullishness on trades. Now holding, there's a big difference between position trades and swing trades. If you're holding Bitcoin spot, you are in a position trade as far as I'm concerned. That's how I treat my spot position. A position trade and how much patience you give that is very different than how much patience you give a swing trade. A swing trade, we're looking for shorter time, or especially a scalp. A scalp, what I would call a scalp is intraday. Within a day, you're trying to pull some money out of the market, try to get a trade within a trading day. A swing trade is over a couple of days or a couple of weeks. And a position trade is, it's more macro oriented. You're trying to buy an asset and ride out the macro winds, tailwinds, and ride momentum of a asset from the macro perspective, right? If you're a spot, you are in a position trade as far as I'm concerned. And you have the time to wait very patiently to see clear signs of a breakdown. So let's just start with that. Let's start with spot. Here's what a clear breakdown looks like. All right, this is last cycle. The last cycle doesn't have to look exactly like this cycle. The history doesn't always repeat, but it often rhymes, right? So this cycle is probably going to rhyme, but not repeat. So quit looking for it to repeat. It's not going to. It's going to look similar. You're going to have probably 3 major impulses, something along those lines. And this is really kind of 4 impulses, really, isn't it? Nonetheless, you get the idea. You're going to have a series of impulses on the way up. And you're going to have some shakeouts. These are what shakeouts look like, and these can be nasty shakeouts. Now, this far along in the cycle, we're having a worse shakeout. But you see here, how far did we get below one of my key moving averages, the 120-day? We traded below it a couple days, but then we recovered it, right? The 50-day is important to keep an eye on, especially if it crosses. But this is I'm going to show you roughly what a shakeout looks like versus. So a shakeout is a big sell-off into a key level like the 120. The 120 is not the end-all be-all. It doesn't have to be the 120, right? So this is what shakeouts look like, and this is what resumption in a bull market looks like. This is what a bear market looks like. You get a series of higher, lower highs and lower lows. You lose key levels like the 120 and the 50, and then you have things happening with momentum indicators like the 50 crossing the 120. This to me is a death knell. If this were to happen, we're done. We are done. I'm out 100%. This happens, I'm out 100. You guarantee I'll be out 100%. And if the market swings back around the other way and it retakes these levels, we start trading back above it, I'll get back in. It's an insurance policy though. It's an insurance policy at that point. I'll miss a little bit of price action, fine, but the risk is now the downside. The other thing about being, we all need to be like predators, predator-like market mercenaries. If you're going to be a predator, a market mercenary predator, what you're doing is you're playing the probabilities. You're not playing the certainties. There are no certainties. There are 0 certainties. We do not know what's going to happen tomorrow. Again, the cycle might rhyme with the macro events of the halving and everything else, but the overall, what's happening in the world, what's happening with finance, what's happening with money, what's happening with Bitcoin, it's different now than it was in previous cycles, right? There's a lot of other things going on, a lot of other elements. So we do not know so we can't pretend to know what's going to happen tomorrow. So we have to take action and be agile as we see things unfolding. If we see clearly, this is what a capitulation looks like. You lose this level, you get meaningfully below it, you bounce back up into it, and you test that as resistance. Right there is when you know you're wrong. So this is a painful pill to swallow, right? For those of us that held through 65,000, if you held through 20,000 and you didn't get out on this first bounce, then you had to wait all the way to get down here, and this is the bounce I'm looking for absolute confirmation. It's painful. That's half the top price. But in the grand scheme of things, if you bought in at the bottom, right, over here, you still have a 10x return instead of a 20x return. And then you can get out ahead of all this pain. This is what I'm looking for confirmation that we are in the bear market. Something that looks like this. And it doesn't have to be around the moving averages per se. Let's go where we're at today. All right. We talked about, we traded below the 120 for a little bit last cycle. Other thing to keep in mind is we separated so hard from the, look at all this airspace. We separated so hard from the 120. I'm going to give it some room. Why? Because as we separated from it, as we cool down and consolidate, the momentum of that is going to carry us underneath it a little bit, and it can still definitely turn around. So what are we looking for now? So that's your, and if you're a spot trader, if you're a spot, you're looking for this. You're looking for, all right, if you're in spot and you're in a position trade, we're hoping to get out on a parabolic move. First of all, we haven't had really an uber parabolic move. We've had some pretty strong moves, but it hasn't really been parabolic, especially because of the nature of the last three tops. I'm going to show you that here in a second. So the first hint that we're not in the bear market is the nature of the sell-offs. You see here, within a few days, 7 days you were down 50%. 30 days you were down, you were down almost 50%, 40-something% in just a few days. But then 30 days you were down 55%, and 53 days you're down 70%. We're currently down 30%, right, in 30 days. So let's go back to where we're at. The thing about this cycle is a series of smaller tops. This is almost a parabolic move right here, right? All through December, you could almost call this a parabolic move. But then we bounced out of that, made new higher highs, and we're still above that level. So if you're on spot, here's a couple levels to watch for sure. This high right here, this swing high, you can't lose that. Period in the story, you can't lose that. If you lose that for more than just a wick down, you gotta start to trim, like I think. This level right here is super important. We already hit it a couple times. This daily level right here, 45.2 we'll call it, super, super important. And Heath called this out this morning in his stream, and Heath is the man, so I'm gonna listen to him. You lose this swing low, you're going lower, right? You lose that swing low, you're probably taking out this, and you're coming down in the 30s. Let's try to trim ahead of that, but those are the levels we're really watching right now. So I'm gonna give, we're now under the 120. The clock is ticking for me. If we don't retake this relatively soon, I will start to trim. What am I looking for to trim that? Well, I'm looking for us to not get very, very. If we come into these levels, and if we don't rebound and retake that right away, if we come into those levels we're talking about, don't bounce and retake the 120 within a couple of days. We bounce off of this and we make this real weak attempt and come into like a level that's below the 120. As we come off, I will be starting to sell my spot, okay? That's where I'm looking at right now. This prime trend line right here and this 49 level are super important to me, right? The 49 I think is a weekly level. Let's look at this. I'm gonna zoom in here on my master chart. Yeah, it's a weekly level. That weekly level right there, we really need to stay above that. You start getting below that, closing below this weekly level, it's bad news bears, okay? So that weekly level is the first line, 49,100 is the first line I'm looking at. We lose this and close below it, I'm gonna see how we bounce off of these levels. Weak bounces, I'm gonna start to scale out as we come into this resistance here and sell off, okay? That's how I'm gonna play it. I do think we'll probably get a pretty good bounce, and we need to watch this next move really carefully. If we get a bounce in a 53 and it starts to come off, we're going to watch that same price action. Probably if we were to come into 49 and lose it, I would also start to trim. Those are some scenarios I start to trim spot. Now, if you're in leverage, you need to be a little bit lower time frame. You need to be protecting yourself because 41,000 is our spot. Like, okay, we really need to start unwinding below this. And it's insurance policy. I'm not going to be dogmatic and say I'm going to be out entirely and never come back. See you guys, next cycle if we get below this. If we get below this and we'll just keep doing our TA and we start to retake these levels, I'll get right back in. Sure, it's an insurance policy. So maybe I'll have to get out somewhere over here and hopefully get back in over here. It'll be an insurance policy. I'll pay that insurance to make sure that, I'm on the right side of the trade, right? So that's my strategy. It's some key levels to look for. Not financial advice. None of this is financial advice. If you're leveraged here's the scenarios that can play out. If you take out these levels, there's going to be another round of mass liquidations that can spike us to something like 32, 35,000. I would get yourself, this at some point, pick a level right now. Go pick a level. You can use my chart, you can use your own chart, 120, 51.3, 53.4, whatever you think we're going to bounce into. As soon as you see that we're curling off of that, you can even do it on like the 1 or 2 hour, right? As soon as you kind of see that we're curling off that, you come into it and you get the rejection, you get the weakness coming out of it, I would trim your position and get below 32,000, because I think that's about the bottom of a wick on this sell-off here. And the reason I think that, if I take this and I go down, I think 32,000 is like 20%, yeah. So what happens on these, you know, the worst of the overnight wicks was about 20%. You know, this one right here is a really good indicator of what that can look like when you just take out a bunch of longs. Now, granted, we're not overloaded on longs like we were here, and it's probably never going to be that bad, but that was a 23%, basically super fast move, 23% liquidation. So you have to be 23% below the bottom support level pretty much at all times with leverage, as far as I'm concerned, which is 32,000 right now. You need to get below 32,000 to prevent yourself from any realistic wick downs taking you out of your trade, okay? So that would be the level, 30K or below, really, to be totally safe if you're lightly leveraged. Not financial advice, this is my opinion. This is what I would be doing. I'm no longer lightly leveraged. If I were lightly leveraged, I would get it below that line right there. That's what I would do. All right? I hope that helps. Ace, yeah, this is our last chance to pump. Yeah, it is. This weekend, you know, next week or so. If we don't, I'm going to have to play what's in front of me. Period, end of story. You know, and like I said, if it bounces back hard, I'll pay the insurance, right? We'll be on the... I'll lose out a little bit of the move, but if this thing's going to $288,000 or something like that, I'm okay paying the insurance and being out somewhere in here, or you know, I'm pretty confident I can get out at 49. Once I see how this play out, pretty confident we'll at least get back to 49. I'll be able to exit at 49, and I'll wait. If we take all this out, we trade below it. I'll wait until we retake it. I mean, if we just V hard, if I get out right here and we just V, we just take off up here, I'll be back in. So worst case scenario, I'll pay a $7,000 per Bitcoin insurance policy to be on the right side of the market, maybe $8,000 per Bitcoin policy, something like that, right? In the grand scheme of things, if you're looking at a $200+ thousand Bitcoin, paying $8,000 insurance policy to make sure you're on the right side of the trade is not the end of the world. That's the way I'm looking at it. I'm going to show you all this. I've already taken, I do have some dry powder right now. I've taken money off the table with Ethereum. Let me show you my Ethereum chart. I kid you not, I'm not joking. I don't know if anybody hadn't seen this. I drew this fib extension level when we were trading down here at 2,500 on this breakout. I drew these fib extension levels on this breakout. So I went and found the weekly, here's how I did the extension levels. I just found this right here, this weekly impulse from this low to that wick high to that wick low. This is my fib extension levels. And look how the chart respected that. Now here's our parabolic trend line too. All right, this is my parabolic trend line and my uber parabolic trend line into the top. So what I did is I exited too quick, a little bit. I shaved my initial 20% of my Ethereum that I trimmed into Bitcoin was right through here. I think I missed. I thought this resistance was going to come into play a little bit harder. I think I got wicked out right here. I probably had my stops set right here. So we came back into this level or something. I don't remember exactly. In here somewhere, I got some of my Ethereum out, right, into Bitcoin. Moved it to Bitcoin. That was a mistake, a little too early. And then now I've aggressively moved. Well, I moved to the spot. So on this chart, now I've been selling in the spot up here. So I took 20% of my Ethereum off with that ETH BTC trade. I'm now 60% out of Ethereum. 60% of my Ethereum have gone. So I sold about another 50% of it, right? So right up here, as we came into this price level, I drew this parabolic trend line as we came into the very tippy top of my fib extension. As we came off of that, I watched, and I took some off as we lost this level, somewhere in here. I don't remember exactly. And then I took the rest off as right as this morning. I told the Discord group, I'm taking some off the table into spot as we came into this fib level resistance. We bounced into that. I sold because we're coming down. Okay, Ethereum is coming down. End of story. I'll just leave it at that. Now it'll recover, but it's going to consolidate between 1951 and 4200 for a while. So your price action likely is to look something like this. Okay, that's my firm belief. 1951 is your last weekly support. You're coming down to that. I believe. Not financial advice. My opinion. I'm an idiot. You lose all your money. You're coming down 1951. All right. Market mercenaries, man. This is the way it is. Sorry to tell you, it's the way it is. We're here to make money. We're not here to make friends. We're not here to to fall in love with projects. You can fall in love with the project. You can support the project by my way of supporting I like Cardano. I've decided I'm going to leave some Cardano on a hard wallet, staked infinitely, forever, never sell it. Along with my Bitcoin, I have Bitcoin, and I have Cardano, and I have Ethereum. I'll never sell any of those. So I have some of my originally mined Bitcoin, some of my originally mined Ethereum, and some of my original Cardano purchase and my staked Cardano. I'm getting staking rewards. So basically, this is equivalent of mining now, right? My investment wasn't in mining hardware; it was in buying Cardano, and my freshly staked Cardano, I will keep forever. So it's going to sit there on a hardware wallet, some portion of it, probably 20% of my whole Cardano. Otherwise, I'm a market mercenary. I'm here to make money. The market is a beast. The market will humble you anytime you let off the gas. Anytime you start to believe the hopium, and you're like, oh, no, the breakdown isn't that big of a deal. The 57 level will save us. No, it won't. The market will beat you up. You got to be a mercenary. All right, I'm looking at comments. I've been ranting for a little bit. Cardano's going to the moon. Get on the train. Here's your CTM entry coming up. Get on the train. Not financial advice. I'm an idiot. When Polkadot breaks out here, get on the train. Not financial advice. I'm an idiot. These two are gonna wreck it. They're gonna wreck it soon. And this is not. They haven't wrecked it yet. This is nothing. I don't. When it happens, I'm not gonna be able to fathom it. Promise you. We're all gonna be like, what is going on? It's gonna look like this on steroids. Right? It's going to look like this on steroids. That's just what's playing out. That's what I see right in front of my face. It's going to look like this, but bigger. Okay? So, all right, got that cleared out. All right. Thomas, I do not think all alts... $2,500 ETH. We're not going to see 2,500 ETH. All right, we'll see about that. I'm going to show y'all something. This is ETH last cycle. People have short memories, man. Things move around. Crypto moves. It moves. Both ways. Quickly. Where's our prior all-time high? All right. If you were trading ETH last cycle, I was. When this thing hit $400, there was no way. Oh, there's no way it's going to $100. Yeah, okay, whatever. It hit $125. That's four times off. It was 420. It went from 420 to 125. Then it didn't quite make it back 399 to 200, and then it went berserk, right? Later. It moves fast. It went from 861 to 480 overnight. Like literally overnight, cut in half. ETH is going to be all over the place. Now ETH is more mature now, so maybe it's not really fair. This is what I'm looking for. I'm looking for this move to happen, and it may be more mature. So 412 to 130 is a much bigger move than 4,000 to 1950. Just FYI. If you think this is not possible. 2,500 right there. Yeah, I mean, that's a good level too. Right there. You can see this is that fib level, 25.95. Could hit that. I don't know. We'll see. Oh yeah, trade talk. So yeah, that's what we're talking about, Heath, is I think Ethereum could come all the way back to 1951. given it came from literally it's 10x what that peak. So 420 peak, it was 10x that, and it came back to 125, which would be 1250. So it would what it did last cycle would look like it coming back to right here. It's exactly what it did. This is not like, I'm not trying to scare people. This is not like science fiction. This is what it did. It traded up to $420, and now it traded to $4,200, you know, roughly. And then it traded down to $125 or $1,250. It's exactly what happened last cycle. So it's not science fiction. I think 1950 is probably more reasonable. It's a more mature asset, and it probably won't have the same level of sell-off. I mean, it could even stop at 2,500. I'm not gonna say 1951 is a definite. It's just a possibility. You know, I'm gonna say 3,200 is a definite. Sure. All right, back to comments. Oh, good. Sold half your ETH to BTC. Hey, ETH BTC is gonna come off now. So here's the other thing. People are looking at these charts, and you're gonna have ETH can take out this high. ETH is one of the few. Now, I love Cardano and Polkadot. Don't ever get me wrong. I'm just fine with ETH. I just know the hype cycle, the way hype cycle is going to work. I knew I said Ethereum was going to be strong first, and it look at what it did. It blew me away. Like, I didn't expect it to move as much as it did. So because I thought it was bigger, more mature, right? But I said ETH was going to move first, and then Cardano and Polkadot are going to move after it. And I'm telling you, Cardano and Polkadot are going to move bigger than Ethereum. Not financial advice, I'm an idiot. They're going to move bigger. But you see the increase in amount of resistance here, this price action? We were likely to come in here and find resistance. And this is what we're kind of doing right now. I would not be shocked if we take out this high at the end of this, though, honestly, on Ethereum. The problem with Ethereum is Ethereum definitely can gain. Right now, it's half the market cap of Bitcoin. Right, so it was, or recently, it was $500 billion and Bitcoin was $1 trillion. It's half the market cap of Bitcoin. That's a pretty big leap from where it was coming into this. But I see no reason why Ethereum couldn't overtake Bitcoin market cap long term. Well, I can't see a reason. I can craft a narrative and I can craft a story that says that it will. Right, it remains a dominant platform, and Bitcoin doesn't reach global currency status, right? A global reserve currency status. It remains like a store of value, and Ethereum is the dominant crypto platform. Sure, Ethereum can pass it up. The big thing is Ethereum's got competition, and namely Cardano and Polkadot, and he's going to have a hard time fighting these guys off. It's just the way it's going to be. You know, to maintain that level of dominance that it's got now. So, all right, back to comments. Yeah, I'm really trimmed on ETH because I fully expect it. I mean, I'm going to hold some of it. Like, I'm not. Again, I could be wrong. It could blow out and go above these. It could, you know, find support at 32 or 35 and resume. I don't know. All right, we got a bunch of comments. I got a gajillion comments. Ace, did I get your? Are you good? Do you? Ace says he thinks ETH has more room to run. Yeah, it does. It does because this. It does. You're right about that. We're at the top of that fib level, though. So what ETH has to do is just cool off and consolidate and then run again. Here's what it has to do. Right here. This last cycle, here's the ETH-BTC ratio. You see, you know, it made big strides, but it at least had these periods of consolidation. So it needs this right here. This is 1, 2, 3, 4, 5, 6 days of consolidation. This could definitely be what's coming. Right, and then we get another breakout. Sure, that's absolutely fair. Just for right at this very moment, we need to cool off because we've made such a big measured move here, and then we can go take the next. Once we kind of get another couple of days of price action, get us another set of cool off and another set of impulses. It definitely could. You're just when you look at how big this move was and where we're at. You're into resistance on ETH-BTC. You know, you're coming into more and more resistance on ETH-BTC. So it's just it's less of a certain thing. And this is the other thing too. It's just less certain now. The safe trade, the easy trade. I was super aggressive trading this range here, and now I'm less aggressive on trading versus Bitcoin. I'm not going to. I know the rotation is about to happen to Cardano. So what's going to happen is probably ETH is going to lighten up, and Cardano and Polkadot and a few others may take the baton and carry this down to here, where while ETH consolidates, and then probably Bitcoin bounces and ETH may follow it. Who knows? We'll just, again, we have to play what's in front of us. I think ETH needs to consolidate though, and it is. It's consolidating right now before our eyes, so that's good. That's fine. We'll just see what happens next. We'll keep charting it, right? But we reached our levels, right? If you were trading this and you mapped out this fib extension, as you broke this level right here, beautiful trade, and just ride this, take a little profit here, maybe re-enter there, take a little profit here, take a little profit there, and take the rest of the profit coming off of that trend line right there. Been a beautiful trade. So I didn't quite trade it like that, right? But I already had a pretty big bag, so I was just really looking for places to trim. Safe places to trim, be preemptive of the potential rotation. How's gold? Gold's a metal. I can't send you gold right now in the next 30 minutes. I can send you Bitcoin. So gold's okay. What charts are you using? This is well, it's trading to use the trading platform that the charting platform that all of us use. Questions. Ace, did I get your questions though? Are you still here with us, or did you drop off? But yeah, Bitcoin, you'll never see $2,500 Bitcoin, that's for sure. When's a good time to trade my alts in the BTC? Seems like my alts value has risen massively now. Yeah, I'm doing it right now. I'm actively, so I go down my crypto charts. Right now, I actually rotated into, or I took trades on. I didn't buy any more Polkadot or Cardano. I took trades on Polkadot and Cardano. So I've got, especially Cardano, I've got trades open. I'm looking for another entry up here. So I've got a trade on right now on this breakout. I straight took the breakout. And I put a full-size position, but my stop's way down here. All right, if we break this level right here, I will be back in for another piece. I will move this stop loss up to break even, and I'll set, or maybe right below break, yeah, we'll just call it break even. And then I'll put another trade on, stack another trade on top of that with a stop loss. You know, maybe I have a pair of stop losses. I'll manage my risk. I never do more than 2% risk. It depends on how you measure it. I'm really under 1% risk in my total crypto portfolio. How you can look at it. You have to measure it by. I've got HODL bags and I've got bags for trading, so I'm measuring my risk really on what's tradable, which is I go up to 2%, but really it's 1% of my portfolio is what I'm risking. So right now I'll probably have 1% risk on right here with that stop loss. Move this up, move that there, stack on another trade, so forth and so on. That's how I trade crypto. Really wide stop losses. So it's actually, relatively speaking, for a 1% risk, it's a small position really because of the huge stop loss. So that's why I have to stack them. So I use these big stop losses to prevent getting wicked out, but it takes more management. It takes me a lot more work to manage them because I have to be, once I get the next signal, then I stack. I move my stop loss up, put another trade on with the same stop loss, and I stack another entry. And that way it gets me to a reasonable size while using deep, wide stop losses. So. But yeah, this is a good time. So, I got off on a tangent, didn't I? Sorry about that. So let me show you an example. So ETH BTC, I trimmed some profit because ETH USD came into my take profit target. So I took profit spot actually. I've got some dry powder now, which is great. And I took profit on ETH BTC coming into these resistances, like here. I don't know if I just flat sold on that spike. Something, and then here, right? And then I took a little bit here. Basically, you can think of it. This is where I took profit, right? So I'm taking profit because we're now in the danger zone. We're looking for on Bitcoin dominance, just a really good generic indicator of where we're at. You see this big move. It's going to bounce back at some point, and I want to be preemptive of that because it's going to happen very suddenly. You see these bounce backs happen kind of suddenly before you can really position yourself a lot of times, and the rotation happens so quick. It's hard to catch them. So I want to be preemptive of that. I know it's coming, so I'm just kind of slowly rotating myself. So when they come into resistance, I'll take a little bit. Link, I sold right here, coming into resistance. It's top of my trend line, this resistance right here. ETH BTC, I sold Link for BTC right there, and maybe some right there, right? So I've taken like 20% of my Link off. I've taken 20% of my Ethereum moved into Bitcoin, and another 50% of my Ethereum into spot, or is really like 30% of my Ethereum. So 30% in spot, 20% in Bitcoin right now. I don't have XLM on, but if I were, you know, this is a lot of room to run. Steller is about to break. Steller is going to move too. It's the other one that might move huge. I need to look at a trade on that one. Where are we at on this? This is one to watch. But other ones I've taken profits on. I haven't taken profits on Loop Ring. I thought about it up here, but I wanted to see if we broke this upper trend line. We came off of it, and I missed getting out. I was busy with other things. So now we're below this, so I should probably go ahead and start to trim some. We'll see. I'll have to go analyze this one later. But ideally, I would have taken profit here. Matic, I took profit when we broke this parabolic trend line. My rule, I draw a parabolic trend line. I try to keep this trade on as long as I can. I took profit into Bitcoin right here. And I'd already taken profit on this break of this trend line here, a little bit here. Right? You see how big of a move this has been, right? So we've been in Matic. We've been in Matic since down here. I did a video on Matic that it was going to be one of the key plays for taking advantage of Ethereum scaling issues. I did my video on January 3rd, so I bought my first Matic here, and then I watched it just ramp and ramp and ramp, never sold, and I bought my second set of Matic on this breakout right here. So then I took profit, this is versus BTC, then I took profit on Matic. I took profit, yeah. So I had two parabolic trend lines I was watching. So I draw these parabolic trend lines, and I take profit when they break, more or less, and into the resistance. It's kind of a combination of I came into some sort of resistance and I broke that. So right here I took profit, and right here I took profit. It's into Bitcoin. It's an example. I've already taken, when these things spike, I took engine off somewhere up here, same thing, parabolic trend line. We broke it, probably there, engine. VXV, I took VXV profits off right here. VXV is a huge winner for us. This thing popped like 20x in like a few days. Alan and I were all over this. Alan and I were talking about this a long time ago. We got on this as this was breaking out, and then we got out as it broke down. Right? Trend line breakout, breakdown. And I think we've had a couple pops on. We played this one twice. That's how I do it. So I'm constantly looking at my small bags. GRT, I still have a small bag on. Haven't taken any profits on. H bar is about to break out. I don't have any H bar currently. Let's see here. VET, I've already taken profits on VET. Same thing. Parabolic trend line, right? So VET's moving. I think I took profits on this trend line break right here on VET BTC. Yeah, right there. Came into that resistance, lost this trend line. I took profits there. I still had 50% on. I let the rest 50% run. When we broke down here, I took the rest through here. And I'm out on VET. No VET right now. I'll keep watching it. VET's looking beautiful, so if it were to break back out to the upside, then I might get back in. You know, something. We'll keep an eye on it. It's really, this is going to be a better break that, something like that. I need to get back on track in VET. So that's how I do it. Right now is a good time. You're in the danger zone, right? Make it very simple. In this area, we don't know. You see these bounces that Bitcoin has? Bitcoin's going to it's going to bounce. Something like this. And it might be a bounce into resistance, and we can play that back down. But it's going to bounce kind of possibly unexpectedly. This actually gave us some nice consolidation here last cycle. What was that? January? Yeah, it was post BTC sell-off. Here's what happens mid BTC. This is what was happening. It would come off and then kind of bounce kind of randomly. Now, I was playing it last cycle, so I'm trying to be preemptive this cycle. But this is the danger zone. Bitcoin's rate, anything below 50, Bitcoin can bounce, and especially in this area. So I'm going to be more aggressive. I might sell some more even Cardano and Polkadot down here, right? If Cardano and Polkadot run hard and they run this down here, and they're the leaders, and a few other projects run this below this, in this zone, I'll be rotating even my Cardano and Polkadot hodl bags into Bitcoin, assuming Bitcoin doesn't completely fall on its face on us. We talked about Bitcoin levels earlier, as far as I'm concerned. Where we're at. Ultimately, as long as this is my prime trend line right here. I'm gonna make it yellow for you guys. That's my prime trend line on Bitcoin. This is the ultimate indicator to me. If we stay above that, I can survive us being consolidating below 120 and above that. If we get below that, that's where I start to really be concerned. Close below it, right? So, all right, lots of things. Would BTC have dumped if we had not had? Yeah, I do think so, Ace. I do think that the Elon thing was just a straw that broke the camel's back. Because I was watching this already. We came up into 57 and got a pretty hard rejection, and I think he tweeted that like as we already broke down. We were already down here when he tweeted that. Now I don't know if this pump was somebody caught wind that Tesla was about to say something about Bitcoin, so they like this pump was that, and then they found out that it was the other. And I don't know, like exactly if somebody was clued in that Elon was going to tweet that or something. I had some buddies that he was clued in on, but if you go to a really low time frame, I'll show you how I played it. So I saw the rejection, and we broke down, and I think this little bounce right here, he tweeted that. I think after we snapped this. We'd already broken this, and he tweeted that, and he just sent it like, I can't remember. So I took my lightly leverage off at 51.3. I must have done a really low time frame. My goodness, I can't even find where I would have got out. Where did I get out? 51.3. This bounce right here, right here. So it was after he tweeted, yeah. But it was already coming off. I don't know. So this was the price action coming into that tweet, and that maybe these red candles were that tweet. All right, send it straight down. So the answer is maybe we hold 53.3 without his tweet. Maybe. I don't really know, honestly. I don't think there's any way of knowing. But yeah, this was the price action. So maybe we just had a rejection, and maybe 53.3 would have held, 53.4 would have held. I don't know. This is where I got out of lightly leverage, right? I told the Discord group we get down below 51.3. That's my like line in the sand for my lightly leverage. On a bounce back into it, I'm getting out right there, cut out. So I'll probably end up, obviously I'm going to end up paying for that. The likely scenario is we do end up holding these levels and then bouncing back, and then I'm going to be back in leverage over here. So I'm paying an insurance penalty, right? So I sold my leverage at 51.5, and I'm going to have to buy back in at 57, 58,000, something like that. It's insurance. But yeah, that's thoughts on BNB and Uniswap. I kind of was mean to BNB earlier in a tweet. I basically said, I was talking about trash coins like meme coins, and I included BNB in it, but I think it needs to cool off a bit. I think it's way overhyped. BNB is great, but I mean, it's like you saw how bad Coinbase IPO went. Is Binance really that much better than Coinbase? Yeah, they are. Is the Binance Smart Chain really that competitive with these other? No, it's not. Binance Smart Chain is a lightweight fork of Ethereum with some centralization hacks. Centralized, decentralized. As I said in my tweet, come on, man. It's centralized, decentralized. I don't like it. It's a giant ascending wedge. Look at this. That is going to snap to the downside, people. Probably. Yeah, I think it needs to cool off. I think it needs to sell off. Once it loses this level, it's gone. You're bouncing on it. You're bouncing on it. It's trying to hold it. If you lose that, it's gone. My opinion, not financial advice. Pan by the river. What's Ada doing? Oh yeah, spiked to 210, and we just holding that parabolic trend line. Off we go. That second entry. Dot broke above this level again. We need to. I will take a trade on a breakout. So get above this, 41.60. I'll take a trade on, small trade on here, and hopefully we get a CTM signal to take a bigger piece on. We'll see. Oh man, what time is it? 3:55. Okay. Check out the volume on BSC though. Yeah, I've seen they've got pretty good volume. Everyone's talking about institutional integration, how we can integrate into the fourth quarter. Can you check Ethereum Classic, ETC? Yeah, sure. I should have been. I need to be on this. Is it on my chart? I'm gonna put it on my chart right now. This is a very tradable. I don't like the founder at all. Like, dude is nuts. Like, I do not like him at all. He's like a super. I don't know what his deal is. Anyway, he's interesting. He's an interesting guy. But it's tradable. Definitely tradable. Ooh, man. Why is this yellow? I ain't got nothing for you, man. Let's see here. Whew, it's got a cool. I mean, I don't. I don't know. You got a bunch of resistance. That's all I know. Ethereum Classic's trash, so I don't really know what to say about it other than it's tradable. But I mean, this is like something I be looking at short right now. What does it look like versus Bitcoin? Why do I have the USD chart? I don't care about that. That's what I care about. A little, I don't know. This is a shortable asset. That's all I know. When Bitcoin starts its run, this might be something to look at shorting. I don't know. I would short it. I wouldn't go long it. All right. Anyway, that's that. ETC, Brandon, should ETH make another semi-annual spike within a month? No, I've been pretty aggressive about getting out of ETH. I'm very, very, very light on ETH now. I stupidly went straight into GBTC and BITW, which I haven't even checked. I'm sure my account's like blood red, horrible looking, but you know, overall it's up like 8x in that equity account where I hold those. So I'm not too terribly worried about it, but yeah, ultimately I should have sold my ETH and just held on to buy dips. But I rotated. I just did immediate rotation because I didn't want to miss out on a move. GRT. I like GRT. It's one of my favorites. My favorites. It's just consolidating. It'll move big when it's ready. We get some hype around it. It'll move big. We just need a confluence of that Oracle space, pseudo Oracle space, the interconnect space. So you need like Chainlink and Atom and Polkadot and some of those other ones to kind of move and then for the same time them to release something and make it move big. It's just consolidating. It's hugging this support right here. Probably not a bad time to add it if you like it. Not financial advice. Banned by the river. Good time to buy. Hedera is wanting to break out. Hedera's looking good. Hedera. Out of all the problem with it, I do not feel comfortable with. I've not every time I go to try to research these graph-based ledgers, I just get the heebie-jeebies about them. Like, these things just don't make sense. There's a lot of holes. There's a lot of hype and promises, but not a lot of reality. I haven't yet gotten around to feeling comfortable with them just yet. I think this is a next cycle thing. Hedera, Nano, the graph-based ledgers, IOTA. IOTA was something I was big into before, but I think this is more of a next cycle. These guys could be the real champions. Whoever figures it out. But right now, it's kind of an unknown space. I'm gonna flip some music. This is like killing me. I'll go to my chill Our Lady piece. Start Our Lady piece radio. No, shuffle. All right. I'll lit up some Our Lady piece, guys, if you want to follow along with me. I don't know. XRP. Ooh, good. No. Blech. Die. Please die. It needs to die. It's dying. It's good. It looks like it's doing what it's supposed to do. It's going this way. I like it. I should short it. I would like to short this. I'm going to go short this. This looks beautiful. Next time when Bitcoin recovers, this is going to be on my short list of things to short on this next rip on Bitcoin. All right, let's short XRP. Yay. No, I'm just kidding. I won't short XRP because it can do this in your face. But I just won't buy it, period. And I don't like it, and it's going down. So there's that. XLM is where you need to look, man. Like, this is going to take, this is what's taking over. Like, I don't know if you know, Steller, XLM is a fork of Ripple, and it's an open source kind of, fork of it. And it's not a straight fork anymore. They've got their own proprietary technology now, so not proprietary, but they've got their own innovation. And so it is a unique project now, but it initially started as a fork of Ripple. So, anything that Ripple had an advantage in that can do, the Steller project can pick up. So people wanting to avoid the scrutiny of a highly shady set of founders can just go to Steller. So this is where I'd look. Kusama. Yeah, Kusama is the the test net, the front of DOT, the development network, but Kusama's looking great. Look at that. I've never taken trades on Kusama. I always miss it. I always miss Kusama. I saw this morning too. I went, oh man, Kusama's up again. I missed it. Yeah, I don't track this one closely enough. Clearly, you know what? I'm so invested in Polkadot though. It kind of feels weird putting money into Kusama because I have so much invested in Polkadot. I'm like, I'd rather just play the big boy. I learned this a long time ago when I used to buy energy equities. I would try to buy like the sub companies, like the MLPs and stuff like that, and they were just so difficult. They were very volatile, and unexpected weird things would happen with them, and they'd get sold off or something, and it's like they would just tank. Whereas the parent company would just move around a little bit, paid less of a dividend, but I learned to start buying the parent companies of these things and not the smaller like MLPs or stuff like that. It's kind of how I feel about Kusama. It feels like a small, it's like a subset of Polkadot. So I'm so invested in Polkadot. Like Dot's up 14%, and it's totally, to me, this is like really safe. I mean, in the world of crypto, nothing's safe, right? But this is super safe compared to Kusama. So for me, that's probably why I don't trade Kusama. I just rather just stick with Polkadot. And they obviously trade together. Kusama maybe has a little more upside. It moves bigger sometimes on the upside, but it moves bigger on the downside too. So, what you gonna do? No, it doesn't matter. I mean, the reason it has a low market cap is like the main Polkadot network is where all the high value stuff is going to be, and the lower value stuff that they don't want to pay the very expensive rates of being a parachain, slot. You go to Kusama. So yeah, all the really high value stuff is going to be on Polkadot. So I mean, I wouldn't be shocked if Polkadot actually outperforms Kusama, even though it's a bigger market cap. It's the same thing, right? Kusama is just a test net for Polkadot. So it just doesn't have the same market potential. It moves around a lot more, so I guess it's tradable in that respect. But all right, oh, is Ada moving again? Come on, Ada. Let's go to like $3 today, please. I just want it to happen. It's gonna happen. One of these days, it's gonna move. It's just gonna be like absolutely gangbusters. It's gonna make Doge look like a joke. The reason it's going to make Doge look like a joke, not because it's going to move more than Doge, because it's going to move and stay there. It's not going to just fall off the plate. What is Doge doing? Yeah, this needs to die. This also needs to die. Go away, you silly puppy dog meme coin. I was rooting for the kids, the kids playing this over here, kind of. It's like, yeah, fine. Kids can make some money, cool, and they're learning a little bit about crypto, yay, hey. But when you started getting these big, I'm like, all right, hold on. This is when Charles, from Cardano came out and said, look, this is really going to hurt the space. This is going to give regulators an excuse to come in and wreck the space. When this speculation, when this sells off and people lose money, it's going to give, it may not be that valid, but they're going to come in and just want to regulate the heck out of this industry now because of this nonsense. So, and that made sense to me, so I quit rooting for it. Now, I don't want people to lose money. That's the other thing. So I try to warn people away from this stuff, but this is not going to hold, right? There's nothing holding this up. So, yeah, it can pump, but nothing's going to keep it up. This is going to stay up. It can pump and stay up because it's got real, a Cardano is going to look like Ethereum when it's all said and done. Let's go look at a long-term Ethereum chart. All right, I'm going to show you all this. This is just think about this. Buying Cardano right now is like buying Ethereum right here. Right, we're mid-cycle. Cardano's pumping. Cardano's probably right here. Right. So what happens in the alt-season rotation, if you think about it, it's a good way to look at it. Buying Cardano right now is buying Ethereum right here. So what you got going on here, this is when Ethereum ramped, right? So what's going to happen is, money flows typically from BTC into ETH, and then ETH, his little brothers and his competitors, as the hype cycle changes, ETH doesn't scale and blah, blah, blah. It's proof of work. It uses a bunch of energy. It's going to be proof of stake soon, but it's not. They have to, and all the FUD around, it's going to be impossible for them to transition, and what happens, and is the network going to break, and blah, 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 blah. So that money then rotates into people looking for the next Ethereum. And the next Ethereum is Polkadot and Cardano are the next Ethereums. And there is no next Ethereum. They're going to be strong competitors in that space. And so then they ramp. So this big run up that we just had, so this right here that we had, Let's show y'all. This is this from last cycle on Ethereum. This is probably what's coming next on Ethereum. This whole long consolidation, and then a nice little breakout. And so we're going to get well above where we're at today, like $10,000, $20,000. But it's going to come after a big long consolidation, right? Where Cardano is, Cardano's been consolidating, just now breaking out. This is about to be what happens on Cardano. And then Cardano's going to consolidate. And this is going to break back out at the end when we have the last alt season pop. And then it's going to go to the bear market. And then next cycle, it's going to go crazy bananas. So it's a real project. It's going. I mean, they have literally the largest blockchain in the world is Cardano. Did y'all realize that? This is the largest blockchain in the world by actual deployment, right? They are deploying in the real world, onboarding millions of student identities in Africa. They've got projects with Ethiopia and Tanzania. They are, as far as committed projects and number of users, the largest. Now, I guess technically speaking, they don't have those projects fully online yet. When those projects are online, Cardano will be the largest blockchain on Earth by users, by real deployment. This will be the largest blockchain deployment on Earth. So it's not going away, is my point. So buying Cardano right now on this breakout, after all this consolidation, I can't. Not financial advice, I'm an idiot, lose all your money, banned by the river. After all this consolidation, look what happened here. Consolidation, breakout, slight pause, and then off. Consolidation, breakout, slight pause, and then off. You know, buying Cardano right now is like buying Ethereum at, what was Ethereum at? What was Ethereum at back there? I don't know. Before it, right, at the second, see its little second, see how similar this is? You know, we look at all this consolidation that Cardano did. Cardano made a nice leg up. This was a move on Ethereum from 15 to 50. Maybe Cardano moved a little bit more than that, but you see this big long set of consolidation. Actually, it's probably more like this back here, right? Yeah. Is this right? Something doesn't feel right about this. Oh yeah, okay, there we go. What the heck? Yeah, okay. So you see this big move that Ethereum has put in. This is what just happened. This is where we're at. We are right here, this cycle on Ethereum today, right now. As we're talking on this stream right now, this is where we're at on Ethereum. This is why I think it's going to 1950. But this is where we're at on Cardano. See this little consolidation, this little bit of breakout, that little pause, and then that's where we're at on Cardano right now. That was $125 Ethereum. Buying Cardano today at $1.92 is like buying $130 Ethereum. I'm an idiot, not financial advice. Lose all your money. But, you know. Polkadot. Buying Polkadot at $40 is like buying Ethereum at maybe at $125. Crazy, I know. It's true. All right. I've missed a ton of comments. I need to get back to comments here. My BTCD feed, I think it's just calculated by TradingView, CryptoCap. Yeah. So if you just type in BTCD and TradingView, that's where you get. So it's CryptoCap, I guess. Price target for ADA? Well, the problem with 1/1/2022 is I think I have one more set of charts to show you. Thank you for reminding me. I think Cardano is going to be selling off by that point. So we're going to be coming into a low. So if I'm going to give you a really rough estimate of how price action is going to play out. I'm an idiot, not financial advice, lose all your money, blah, blah, blah. Let's find it. Where's that? Man, that's a long way away. Good night. All right. Cardano is going to break out, just like Ethereum did. Choo! I don't know, $3, $4. Seems about right. And it's going to consolidate. And then when Bitcoin makes its big move, it's going to be testing its prior all-time highs. And then when Bitcoin sells off, post-sell-off, I don't know exactly. So yeah, we're going to make a big move, another big move, and not quite get there. Consolidate some more. And somewhere over here, and that's, yeah, you get the idea. And then we're going to come back up, and then it's going to go $10. That's what I think. Let's just do it like this. That's what this year's going to look like for Cardano. Okay? So, there you go. There's a really rough Robin Hood looking chart template for you. Probably a blast off, huge breakout, new paradigm, a low of probably something like two. I got pretty close. $2.50, $2, $3. I think somebody's at my front door, but they're gonna have to just deal with the fact that I'm busy. That's my guess. I think $10. Why do I think $10? I don't remember. I've done some calculation on it. It came, $9, $40, $12, whatever, something like that. Just $10 is a nice round, easy number to say when people ask me, because everybody asks me all the time. Ah, CTM entry. All right, I'm gonna get off the stream and add. Hold on. I'm watching. I can trade on my phone, so I'm gonna add. As soon as we take that out. Ooh, man, I'm so nicely in profit too. New order. ADA. Cardano. Let me get my order ready. Cardano. Let's go versus Tether. Can I trade versus Tether? I got USD. I need to add some Tether to this account, so I need to take profits in Tether. Oh, I can't do that on leverage. Phooey. All right. Are we gonna take it? So I take trades on the body a lot of times, but this time I'm gonna kind of just wait for the wick. It's close enough. All right. Get my order here. How much can I actually add? Now I know the math on this. I've already done the math on this because of my last entry, but I can actually make it a slightly bigger position. I also got to move my stop loss up here. I'm gonna get this order ready. I'm gonna make it the same size order I had before, and I'm gonna deal with my stop loss as soon as we get off. So I can move this little stop loss. I'm gonna get this order ready right now, and we're gonna watch it together. All right, I got my order. Can't see it, right? Okay, good. I'm just gonna stay here and watch this, and I will take this order right now. Thanks, Gene, for the help on the spam in the channel. What do I think of Luna? Luna's okay. Right. Luna's okay. Hold on. You asked about the project. I'm trying to remember something. When I looked at Luna a long time ago, I remember thinking it was okay. If this is the same project I'm thinking of anyway. I get so many projects I look at. Yeah, I remember thinking it was okay. I don't know. I'm gonna keep waiting. I'm gonna wait for that wick to be taken out, guys. So that's what I'm gonna wait on. 195. It's kind of a high price. Crazy feeling, but yeah, I mean it's just that's what's going on. All right, what's going on with Bitcoin? Oh, Bitcoin! Look at this. We got a potential really super aggressive 4-hour. Bitcoin's recovering a little bit here. All right, for you guys in leverage, another thing too to keep in mind on the leverage trade thing. If we make a very strong recovery, you can just hang on, right? But it has to be a really strong recovery. What you're looking for is on a very low time frame, these resistances to be met and kind of curl down. That's probably the time, even if we just turn right back around and take it out, it's probably a smart time to go ahead and make sure that your leverage is in a comfortable place so you can sleep tonight. Because tonight, I mean, nothing says that over this next weekend, volatility likes to happen over the weekends. We got month close, after this weekend, we're on the 17th. By month close, we better be out of these areas or something's not right. But, you can look if this curls down, this blasts right through here, we're just like really trucking. We got maybe some positive news behind it, then just hang out and watch and see if you start to curl off of some resistance. But until we retake this level, I would say honestly, if you're in leverage at all, until we completely retake and show this as support, any opportunity you get on these coming into these resistances, when you see it curling back down, you probably want to make sure that you're trimmed and you're below that level we taught, 32,000, really 30,000 to be totally safe, right? But you don't have to panic and just sell on the way down. You're going to get these dead cat bounces. So just wait for one of these, see how things are playing out. If you get that curl off of that resistance, like this, it's a perfect example of a little curl off of resistance right there. You just see it, like curl it over. It fell down, came back, curl it on over, and out. Down, came back, curl it on over, out. Down, out. Same thing happens here. And you're paying an insurance premium. You're paying an insurance premium so you can sleep well tonight, so you don't have to worry about getting liquidated tonight. basically, is what it boils down to. Because this thing could, you know, more FUD, you know, Janet Yellen could say something, who knows what, and it could just sell off and spike down, and get that spike down to 35, that last liquidation, and then, you know, and then tomorrow morning you wake up and the chart did this, and you're looking at this price here, but you would have been liquidated while you were sleeping. You don't want that to happen. Okay? All right. We have June 10th, July 13th for Fed. Yeah, I don't care about the Fed anymore, really, honestly. The Fed matters. I'm going to take that back. The Fed matters. What they do matters. But it matters kind of short term. In the macro perspective of Bitcoin, the damage is done as far as the macro goes. They've already printed, you know, 30% of whatever, all gajillion, trillions of dollars. The damage is done eventually. Eventually all that. And what's funny, did y'all notice something else? I've got 2 other charts. I've got a few more minutes left. Important. Did you notice that that CPI print, that higher than expected inflation, this huge sell-off happened right after that CPI print and that inflation figure, which should be a tailwind for Bitcoin, right? You know, it's not too much of a coincidence to me that Elon tweeted, and Elon's kind of proven to be a little bit of a tool of the system at times, of the man, of the machine to some degree. He acts like he's not, but I kind of think he is. But nonetheless, and then you had that FUD about Binance and stuff today. All that happened right after that CPI print. Like, you know, I'm not a super uber conspiracy theorist, but somebody out there probably wanted some Bitcoin down here and made some things happen. You know, possibly. I don't know. Like, what do I know? But it's super interesting to me that CPI printed higher than expected inflation, and then boom, Bitcoin sells off. You know, it's going to bounce back. It's a tailwind for Bitcoin. Some interesting charts. I've got to share these charts with you guys. If you're still on, you're going to love this. This is probably the most interesting thing we're going to talk about today. New log charts. I've been working on some really interesting log charts. This log chart is a beast. This is, so what I've done, painstakingly, took a lot of time, was mapped out the impulses rooted at the halving through when price took out the all-time high for good. So what I figured out is it's more interesting when the market takes out the prior all-time high and never comes back to retrace it, right? The day that happens, the day that you get that first close above and never touch the all-time high again, right? On that, or maybe the day that it opens and that day never trades the prior all-time high. It never goes to that level. It takes off from there. So I mapped that out to the day on this chart in green, and the halvings are in yellow. Then I did a weekly impulse level, and what I did is I found the weekly impulses leading up to from the halving. I found the weekly impulse level, and I mapped those to fib levels. And then I found the next weekly impulse after we took out the all-time high, and I mapped those to other fib levels. Okay. So I found the closest matching fib levels, and then I just extended that up, and this is what I get, right? So you see here, we had a double peak. It came in the very top came into the 3618 channel. Okay, this first one. The second one, the top, after mapping that out. Now this was a little bit more tricky because I had this initial sell-off. So what I had to do is I had to work with this. You can see my level here is rooted at. There's a level here that's. I have to zoom in a lot. I'm sorry. Hold on. I rooted this impulse right here up to the all-time high, and then I rooted the next impulse at this red line up to that one. Okay. And then this sell-off to this impulse. So I tried to map these impulses as close as I could, starting with after it got rejected, this next impulse, starting at the bottom right here, through, and then the red line's there. And this weekly red impulse right here, from this bottom of that candle up to the top of this impulse before it curled over. Okay. And then when they just took that, extended that out, and I get the same resistance. 6318. I mean, a 3618 level as resistance, top of roughly $20,000, right? And this top was $1,200. Now the problem is we broke the model. This time we broke the model. I don't have my adjusted. Darn it, it didn't save my adjusted. So we broke to the downside over here, and I was adjusting this. I found a level that I liked here, and what I did is I made this Elon whole shenanigans its own sub level. And so I started mapping the fib extension levels off of the bottom 236 level, and I made this little breakdown its own unique level here, right? So this needs to be adjusted. I'm sorry, I'm working on it. This is a work in progress. Banned by the river, lose all your money, blah, 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 blah. All right, so now these touches line up perfectly when I give this its own space. So this is now an outlier, a little bit of an outlier. If that holds, and we hold this, and it ends up being an outlier, and we retake this red line, I think we can continue to work off of this work. Now I've got to dial this in. This is obviously a bit off. Sorry, I have to make sure my extensions line up again. So my extension doesn't quite line up like I want. You see, this is the bottom of this weekly at 17,620, and the top is up here. So I need to make sure that these line up properly, and it doesn't currently. So I need to work on this. So this is work in progress. But when I finally figure out the fib extension levels that I like, that we need, now what's happened every single time, the intermediate peaks are at 1618. So you see these intermediate peaks come in at right around 1618. Peak there, peak there, peak there. And what's interesting is I didn't try to line these up to the 618. What I did is I lined it up to the impulse, right? I lined up the impulses initially, and this one might be off too. I wonder if I have just some issue with this being slightly off. I'll work on this. This is a work in progress, but nonetheless, when I mapped it out, yeah. So we didn't quite get to this level. I'll have to work on this a little bit more, but. Some interesting findings. I'm trying to work on it. The bottom line is my zero level, my very bottom touches, and then you see here in the bear market we exit it. So that's a super interesting chart. Here's my master BLX chart. I've been putting some horizontal trend lines on them as well. I want to show you all this. I've shown this before, but remember this is all the timings. This is how we kind of know where we're at seasonality wise. This is your cycle low to cycle high metronome, right? This is just a little metronome of, this is the cycle low, this is the cycle high, cycle low, cycle high, right? And if you just map out the cycle low and cycle high, and you draw a line right in the middle, you don't do anything else, just pretend the halving never happened, and you just draw a line right in the middle, it's right across the halving. The halving date and the median of these is almost perfectly aligned. Super interesting. So this is like a metronome, right? A little ticking metronome of market activity. So this is it all mapped out for you. And this last metronome, we have a market low back here, 504 days or something like that, And then so if we go forward 504 days, I think this is slightly over, it's right around late September. So that little metronome, if that metronome keeps playing out like it has in the past, interesting, swing low to swing high, right in the middle. If all you do is just take the swing low and swing high dates and take a middle line, you're going to put it plots right to the halving. So this is the other indicator that we're probably not at the end yet, because our current metronome cycle, we hit the swing low over here, hasn't played out yet. I also think that this little black swan event is impacting our current price action a little bit too, right? It's caused us probably to have a hotter start, and then we're going to kind of ram into these very bottom scary levels before we resume off. Another kind of data point that we're likely just this natural metronome effect that the halving gives us, we're probably still not at the end of this thing. All right, bunch of charts. Thanks for the crazy check. All right, guys, I have to go. Realize it's about 5 minutes, so I need to be off of here. So I hope you guys found this useful. Sorry we didn't get some more comments. I didn't have any super chats, so cool. I don't feel bad about skipping. I feel bad about skipping comments. Can you share the chart in the Discord group? Yeah, I've shared these charts. Go look in the Discord group. I've shared these charts multiple times. I can share it again. Sure, I will try to remember to do that here in a little bit. This chart you're looking at, this is not like, I didn't just map this. This is like 100 hours of me like studying why, what was happening, news events. I should have like taken the news events, like what caused this day to sell off, right? Trying to find news on that date. What was this? What was that? Just try to make sure that it's all valid. And what's interesting is there's just a lot of macro. If you overlay this, what's super interesting when you overlay the DXY, look at the macro situation, you can also see like an inverse correlation to the DXY. Anyway, it's gonna mess up my chart. But if you overlay the DXY on this chart, it's super interesting because you can take this macro correlation too. All right, yeah, because I started this working with the inverse, like there's some inverse relationship with the strength of the dollar to this as well, as to how fast these moves. Actually, we need to get back to studying that, but the dollar has been getting creamed. This also should be a. If you look at here's my dollar chart, a DXY chart. This is bad news bears. It's gonna tank at some point. When it tanks and we hit the 80s, that's also a huge, huge tailwind for Bitcoin. All right, guys, I'm gonna wrap up. Thanks, Jonathan. You didn't have a question, but I gotta wrap up though, guys. Take care. I'm gonna flip to. Let's kill the music. I'm gonna flip to back to our music. Play. Take care, everybody.